Welcome to the deep dive. We've been digging into a really interesting stack of sources today, mainly a deep crypto market analysis from September 29th, 2025. Our goal, as always, is to find the signal in the noise, and today it's all about one huge institutional catalyst that seems to be, well, really shaking things up. We're not just talking about the usual market swings. No, we're focusing on a major regulatory shift, like an earthquake, really. And it's not about Bitcoin this time, or even Ethereum directly. It's about altcoin ETFs, exchange-traded funds. Yeah, the report showed Bitcoin is holding steady, finding some ground above $112,000. But the real buzz is this potential flood of capital into altcoins. And it's all thanks to a pretty dramatic move by U.S. regulators.
It really feels like the market's at a key phase, doesn't it? You've got this mix of macro stuff, the usual market dynamics, and now this big step forward on the regulatory front. So for you listening, getting your head around this regulatory change, it's probably crucial for figuring out the next, say, 6 months or so.
Okay, let's dive into that main piece of news then. Because this isn't just chatter, right? This is the SEC actually doing something. The U.S. Securities and Exchange Commission has officially pulled back all the delay notices for spot ETF filings. We're talking Solana, XRP, other big altcoins. Now, that sounds massive, but is it really approval? Is the market jumping the gun a bit?
Well, no, it's not the final green light, and yeah, that distinction matters a lot. But the source analysis rates this as high importance for a reason. It basically removes the biggest hurdle, the one everyone expected. Think of it like an obstacle course. The SEC just dismantled the tallest wall. For ages, their main move was just delay, indefinite delay. So withdrawing those notices, that signals a really fundamental shift, a big change in attitude away from that sort of hostile delaying tactic.
Right, and I thought the point about the change in regulatory philosophy was really interesting, like moving away from regulation by enforcement. You know, suing people after the fact.
Exactly.
For actually creating clear rules beforehand.
Yeah.
The sources mentioned SEC Chairman Paul Atkins pushing for this.
That's the core of it, precisely. Regulation by enforcement versus creating appropriate rules. Enforcement is always looking backwards, right? It makes innovators nervous, spending fortunes on lawyers just guessing what's allowed. But proactive rulemaking, the kind Atkins is apparently promoting, means the SEC is finally saying, okay, here are the rules. And when you know the rules, institutions can actually play. They feel comfortable, legally, ethically. That naturally boosts innovation. And maybe most importantly, investor confidence.
Okay.
So the implication, it's huge. This clears the path, potentially, for these altcoin ETFs to actually get approved down the line. And that's how you bring in the huge amount of capital from institutional investors that the source talks about. They don't want the hassle of holding tokens directly, dealing with wallets and keys. They want something simple, regulated, in their normal brokerage account.
So let's talk immediate market reaction, the next 24, 48 hours. How's this playing out on the charts? Is the optimism priced in, or is there more juice left?
Well, the market definitely sees this as a big confidence injection. Helps Bitcoin stay firm above that 112K mark, you know. Gives Ethereum a bit of a boost to test higher levels too. But the really big thing happening right now, capital rotation. Money is definitely shifting.
Rotation.
Yeah, you can almost see the attention snapping towards the altcoin space instantly.
And the reports are pretty clear on who they expect to benefit most, right? Solana, SOL, and XRP seem to be the front runners for the biggest immediate pops.
Makes sense. They're directly named in these filings.
Is that already pulling money out of, say, Bitcoin or Ethereum into these layer ones?
It looks like it, yeah. And that brings us to a really critical metric everyone listening should be watching, Bitcoin dominance. BTCD.
Right, the percentage of the total crypto market cap that's in Bitcoin.
Exactly. If altcoins are genuinely going to have a major run, what people call an altcoin season, then Bitcoin's dominance has to drop. Analysts are watching it closely. It's been hovering around resistance, maybe 58% or so. If this ETF news really lights a fire under alts, we'd expect to see BTCD fall, maybe significantly, down towards the 42% region the analysts mentioned. That would be strong confirmation.
Confirmation that money, both institutional and retail, is moving into higher risk, higher reward altcoins.
Precisely. Moving away from the relative safety of Bitcoin.
And the psychology behind this seems interesting too. The fear and greed index. It jumped quite a bit. From 37, which is fear, straight up to 50, neutral, in just one day.
Yep.
That neutrality feels significant. This isn't just like blind FOMO, right?
It's actually a pretty healthy sign, I think. 50 is neutral. It means there's excitement, sure, but it seems grounded in something tangible, this SEC action. It's not like we're already at extreme greed, say 75 or higher. If we were, you'd worry about a quick pullback.
Right, too much froth.
Exactly. Being at neutral means there's still plenty of room for growth, room for that sustained institutional interest to build as the ETF process moves forward.
Okay, so that leads us to the longer view, weeks, months out. This isn't just about a quick price pump. The sources suggest this regulatory clarity could actually speed up tech adoption. How does an altcoin ETF help grow things like DeFi or real-world assets?
Yeah, this is where it gets really interesting beyond just the trading charts. Think about it. When institutions get a regulated way in the ETF to access something like Solana, it validates the whole network. Right now, big money isn't likely to jump directly into, say, Solana DeFi protocols. Too complex, too risky from their perspective. But they might buy a Solana ETF. And that investment, that capital flowing in, indirectly supports and validates the entire ecosystem built on Solana.
It sort of legitimizes it in their eyes.
Precisely. And it's even more critical for tokenized real-world assets or RWAs. What's the biggest hurdle for tokenizing things like buildings or bonds or private equity?
Legal uncertainty.
Compliance. Exactly. Legal and regulatory certainty. If a big fund wants to tokenize, I don't know, a portfolio of commercial mortgages, they need absolute clarity that they can legally issue, trade, and hold that token within the existing financial framework. The same regulatory framework that allows an ETF to exist provides that comfort. It creates that necessary regulated bridge. This could finally unlock institutional adoption of tokenization on a large scale. That's a structural shift people have been talking about for years.
Okay, so the trading story seems to be potentially a sharp, immediate rally, probably led by SOL and XRP because of the news, but then followed by some consolidation. Why is that expected?
Because, well, the market needs to breathe and wait. Removing the delay notices is a huge step forward, yes, but it is not the final approval stamp.
Still a step missing.
Right. The market's priced in the increased probability of approval very quickly. But now there's this period between the positive signal and the actual decision. That's naturally when you see some profit taking, people locking in games, waiting to see what happens next. So expect some sideways chop, probably, until the next big regulatory update drops.
Right. Makes sense. We've painted a pretty rosy picture based on this SEC news, but we need to talk risks too. Speed bumps. What external factors could throw a wrench in the works? And what should listeners be tracking very closely right now?
Okay, yeah, risk management is key here. The outside world doesn't stop just because crypto got good news. But first, the metrics to watch internally. Keep an eye on ETF flows specifically, money going into the existing Bitcoin ETFs. That gives you a sense of general institutional appetite for crypto exposure.
A good proxy.
Yep. Then track BTC dominance, BTCD, like a hawk. Are we seeing that rotation into alts confirmed by a drop towards that 42% level? And finally, the fear and greed index. Does it stay balanced, or does it suddenly spike into extreme greed? That could signal overheating.
Okay, metrics noted. Now, the storm clouds. The sources point to two immediate, potentially big ones. First, politics in the U.S.
Yeah.
There's talk of a potential U.S. government shutdown looming, October 1st deadline, President Trump meeting with congressional leaders.
Yes, and this is absolutely not something to ignore. It might seem separate from crypto, but it's not. A government shutdown creates massive uncertainty across all financial markets. If basic government functions, treasury bill markets, banking stability, if any of that looks shaky, capital tends to flee all risky assets, doesn't matter how good the crypto-specific news is.
So a shutdown could just slam the brakes on this whole rally.
It absolutely could, or at least suppress it significantly. It makes big institutions pause, wait for the dust to settle. It injects serious uncertainty.
And the second cloud. Monetary policy. There's an ECB conference happening co-hosted with the Cleveland Fed, focused on inflation. Why does a conference in Europe matter so much to, say, someone trading Solana?
Because global liquidity and risk appetite are interconnected, central bank policy sets the tone. If the talk coming out of that conference sounds more hawkish than the market expects...
Meaning tighter money, higher interest rates for longer?
Exactly. If they signal they're more worried about inflation and might need to keep policy tight, that puts downward pressure on risk assets everywhere. Stocks, tech, crypto, all of it. So yeah, regulatory wins are great, but they can be quickly overshadowed by negative macro developments. You have to watch both.
Which brings us back to risk management. Even with this potentially game-changing ETF news, the sources really hammer home the need for caution. Diversification is still key.
Absolutely non-negotiable. Protect your capital. That's rule number one. If you're trying to ride this potential altcoin wave, think about using tools like stop-loss orders to limit downside. And maybe even more importantly, decide on your profit targets before you get caught up in the excitement. Know when you plan to take some chips off the table. It helps protect you against that sudden, unexpected volatility from politics or central banks.
Good advice. Okay, before our final thought, just the usual reminder for everyone
Sure.
listening. This is purely for informational and educational purposes. It's definitely not investment advice. And remember, past performance never guarantees future results.
So we're clearly at this huge potential turning point, right? The regulatory path for major altcoin ETFs seems to be clearing. The market's reacting, pricing in maybe a historic altcoin season led by the likes of Solana and XRP. Very exciting stuff. But here's the question to leave you with. The market's reacted to the regulatory news, but has it fully digested the external risks? How might that very real threat of a U.S. government shutdown, just days away, or maybe a surprisingly hawkish signal from the ECB, how might those things complicate or delay this expected flood of institutional capital?
Lots to think about there. The collision of crypto hope and macro reality. We'll leave you to ponder that. Thanks for joining us for this deep dive into crypto's evolving market structure. We'll catch you on the next one.